Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Honeywell Automation. Is it the right price to buy or one should wait for major declines? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Honeywell Automation, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time on short-term market calls and stock calls. And if you pay $100 upfront, then you get 1 year access by paying for 10 months, so that's a 20% discount, and you can ask me any query every day. For detailed market or company talk or a number of stocks you are holding, you can directly email me and we can work things out with a fee. And also, if you cannot pay through card, you can pay through PayPal on Patreon to get the membership. Now about the company, established in 1906 in US, so it's a multinational based company and US based company that is working here in India. It is a leader in automation and environmental solutions. It serves a number of industries like aircrafts, buildings, cybersecurity, etc. So apart from telecommunication, they are into a number of other industries as well. High profit growth and return ratios are very solid, and the company is one of the most renowned, you can say, listed companies here in India. Taken name in a similar vein, like you can say an Eicher Motors or a Page Industry. It is a renowned global, you can say, brand. Basically works on data transformation, and the market cap of the company is around 38,000 crores. It has grown substantially over the last 3-4 years, I must say. If you look at the numbers, so sales did, so these are actually March quarter numbers for FY21 versus FY20. So sales did dip by 4%, but look at the profit growth. So that is where the margin improvement comes in, or margin accretion comes in, and that is where you can say lower expenses and curtailed expenses has helped. The PAT has increased by around 30%, and that is just tremendous. It's a debt free company, very high promoter holding, low institutional holding, but only 8% free float is there, and that stems a lot of confidence for investors. ROE of 23% is improving every quarter. Operating profit margin of 19% is best in the industry at the moment, and that is where the company is commanding 75-80 PE at the moment. So if you look at the performance, stock has been in uptrend since October of 2018. So till then it was just gyrating, and for 4 or 5 years didn't do much. But from 2018 October it did extremely well. But in 2020 February March it did fall. It fell around 50-55%, but has surged tremendously from those levels. Remember that low equity has led to very sharp moves in the stock, but when the numbers started kicking in, the stock has surged very quickly to these levels, which are currently seen in this company. Has recovered 70% from the lows of Feb March. In fact, it has recovered more than 100% from those levels up till now. Results have remained strong on bottom line. Yes, top line has been not that consistent, but due to, you can say, operational efficiency, due to lower expenses and company doing a lot of thing on curtailing expenses, the numbers have grown on the bottom line, and that is what most of the investors look at. So decent return ratios, which is improving at the moment. The market share is increasing in many segments, so that has also helped a great deal in getting the company where it is at the moment. If you look at the technicals of the stock, there's major long-term support that is around the 36,000 levels. So currently the stock is at 42,000. The support lies around 36 to 38,000 levels. Since the stock is around 43,000, so you can keep a stop loss at 38,000, and we can see that The stock may rise towards 49-50,000. The major upside is expected when the stock goes past 52-53,000. That is where you would see uh, major gains that would take place. So it might just stay in range. That is my call. Might not move a lot, but on certain declines, you can probably buy into the stock. So my call on the stock is that hold if you have it and add on major declines. So any declines towards 36 38,000 is a buying opportunity. It is a very solid company to hold for 4 5 years time frame and can generate 18-20% CAGR. It can easily be 50,000 crore market cap company, could even go up to 1 lakh crore over the years coming forward. The management is also extremely strong. So this is my video on Honeywell Automation. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.